Hi everyone, my name is Gregor Mikkelborg. I'm the host of The Gold Compass, and today I'm joined by Grant Williams. And I have to say, he's one of my personal favorites, and I'm so glad he could join me. And welcome, Grant.
Gregor, it's a great pleasure. Thanks for inviting me. Delighted to talk to you.
I'm looking forward to this, and I would like to start, and I often do this. I would like to start because I have my own journey. Maybe journey is a bad word, but in lack of a better word, how I kind of left the finance industry and got to view gold and the monetary system in a totally different light. And I listened to a podcast with Matthew Piepenberg just recently, a partner in Gold Switzerland, and he characterized himself, of course, with a smile on his face. He said that he used to be a young idiot back in the dot-com era. I guess he bought tech stocks. Somebody bought them at a high price. He got rich, but looking back now, he's saying that he's a young idiot. And I have to say that I've been a young idiot for an even longer time. And I just wanted to get a grip. How was your journey? I'm not saying that you once were a young idiot, but
Oh, I
how?
think I probably still am in many ways,
No,
Gregor.
no.
Yeah, well, not young, maybe. Still an idiot, but not so young anymore.
How was it a book? Did you meet someone? Was it a special circumstance? How did you kind of?
No, no, it was more a creeping realization. It's interesting what Matthew said there. That everybody, I think, well, not everybody, but most people in finance, if they have any kind of longevity in the business, but because it has a habit of chewing people up and spitting them out, if you manage to survive, your first crisis is always an eye-opening experience, and it's very few who make money through their first crisis. Mainly because the nature of markets over the last 40 years have been, steadily rising markets with the occasional major hiccup along the way. So of course people don't get regular practice in experiencing those. You go back to before the Federal Reserve and look at the bars of recession on the US GDP chart, and you'll see that recessions were clumped together and there were far more regular occurrences, shorter lived, shallower, but more regular. And so people kind of got used to the economic cycle. And with the economic cycle went the market cycles. It doesn't necessarily, the tail kind of seems to wag the dog a bit more these days. So for me, in my first crisis, short that was the 87 crash. Then I had my first bubble, which was the Japanese market bubble of the 80s and through the tail end of the 80s. Then I had a kind of very slow moving, it wasn't even a crash in Japan. It just, the market just started going down for decades on end. Then I had my next bubble, the NASDAQ crash. Then I had my third bubble, the housing crash. So this is kind of my fourth major bubble that I've been observing markets through. And this is the biggest and most all-encompassing of the four for sure. And I think that's very deliberate. I think the attempts are being made to prop everything up right now, and that's why we're where we are. I fear when this one finally bursts, it will have much more meaningful and longer lasting impacts on the world, on society, and on the global monetary system. But perhaps we can talk about that a little bit later on. So for me, it was really having seen the Nikkei bubble up close, having witnessed the dot-com run up, and I recognized that as a bubble much more readily than I did the Japanese equity bubble because I was so close to that. And such a young idiot at the time as well. It should be added. So after the dot-com bubble, when I saw the reaction, that was really the point where I began to question a lot more about not only how the system worked, but also what the likely path forward was going to be. And it quickly kind of dawned on me through all the reading I did at the time that currency debasement was going to be the biggest problem that I was going to face going forward, because it would be a consistent problem. It would be an accelerating problem. And no matter what I did in terms of returns generated in equity or bond markets, if my purchasing power was going to get depleted significantly, my hurdle rate was going to be much higher, and that's really what led me to start buying gold in 2003. Was that realization, and an understanding that realistically, money printing, low rates, and currency debasement were going to necessarily be the only real way forward, and it's proved to be that way for the last 22 years. And so I was fortunate that I came to that at the time I did. I was fortunate, actually, in with the benefit of a lot more hindsight now. I was very fortunate that it made sense to me immediately as I started reading and understanding about gold. It made sense, and I've spent 20 odd years talking about this to people, and I found that to a lot of people it just doesn't make sense. They can't get their heads around the fact that this shiny piece of metal is worth something, and can't really understand why its place is at the center of the financial system and not on the fringes. And that's fine. There are some ideas that aren't immediately obvious to everyone that looks at them, and I think precious metals and the monetary system is one of those. So I consider myself very lucky that as I was reading about it in the early days, it just made complete sense to me. And so once it makes sense to you and you're able to shake off the way you've been taught to understand the monetary system and look at it a different way and look at it through a more sustainable lens, I think that's a huge advantage, because it allowed me to question things and go against stuff that I'd learned through experience, because the whole idea of gold as a monetary asset, as the monetary asset, just made sense to me. So that was really how it happened for me. And
Sorry,
I've spent. Sorry, go ahead.
sorry, was there a special book that you can recommend from that time, or was it kind of like the process you now mentioned?
Yeah, it was a lot of stuff. It was a whole bunch of stuff. In fact, the first person who was writing about it at the time that I was reading was Richard Russell, God rest his soul, who was the proprietor of the Dow Theory Letters. And Richard would write about it every day, and I was a big fan of Richard. And it was probably Richard that really got me asking the questions, and sent me to Mises, and sent me to Schumpeter, and sent me to a lot of these guys whose names have become synonymous with Austrian economics and precious metals. And I just found that reading these treaties just made sense to me. It just spoke to me in a way that traditional finance didn't, in terms of that always left me with questions. And I found that reading about gold at the center of the monetary system, the reasons for it and the history of it, it didn't leave that many questions for me. It made sense. The only question was, to me, how long does this purely fiat system last without being forced to go back to this, even if it's just temporarily, as a stabilizing mechanism, because we get too far over our skis and we blow everything up with misallocated capital through low interest rates and extraordinary levels of debt. And it feels like we're getting closer to that. So, I've spent the last probably 15 years now talking about this and trying to come up with new and different and creative ways of essentially getting across the same message, because sometimes it does take the same story told in a different way for it to click with someone. And so that's what I've tried to do over these last 15 years is come up with different ways to try and explain the same situation, and hopefully help more people understand the way that the traditional monetary system has worked, and I suspect will once again work in the future.
And speaking of creative, I also wanted to mention one of your speeches that's on YouTube. I just called it Cry Wolf.
Yes.
I guess you can remember that one. I checked yesterday and it has now 500,000 views.
Is that right? Wow. Okay. Well,
Uh,
that's great. I mean, that was a
yeah,
fun one. It was 7 years ago I did that.
yeah, and it's a masterpiece. I think I've sent it to all the people I can, and I'll link it in the description below this video, because I think that's a video I think everybody should see. It's so beautifully laid out, and you take it step by step, and I think it's well done.
Well, thank you. I mean, I've found that when you're trying to communicate ideas like this, step by step is the best way to do that. Is to just slowly walk people through your reasoning, through your rationale, and try and answer the questions that you can expect to be asked before they get asked.
Yes,
Look,
yes, you do.
it is difficult because what you're essentially asking people is say, look, everything you've learned, the way you think the world works, I want you to think about it completely differently. I want you to put this yellow metal that you profess to not understand. I want you to put that at the center and then look at everything through that lens. And it's a big ask. It's a really, really big ask. And so I understand why people struggle with it. And I also, through personal experience, understand why for some people it just clicks and makes sense. So it's an interesting tightrope to try and walk.
Yeah, and in that video you mentioned Alan Greenspan, and he says at one point, I guess he was at that time well over 90, and he says that there's great value in having a stable price. And I would say that this is my statement, that humans flourish during times of stability, and we haven't had that since at least 1971. Can you just describe how, in your words, the importance of stability, and in the gold sense or in the monetary gold sense, as opposed to the 2% inflation target stability that we have today? Because they call it stability, but in my world, it's anything but stability.
Well, yeah, look, I guess there's two kinds of stability we're talking about here. One is, I guess, the classical definition. Things are stable, they don't move. The other, which I think the central bankers are looking at, is a stable increase in prices. You know, that they want this increase in prices, which equates to a destruction of purchasing power, to be steady. I think steady is probably a better word than stable.
Hmm.
They talk about having stable prices. That's the mandate, but that's just semantics, really. The word that they're looking for is, you know, is steady prices, i.e., they're increasing at a rate that doesn't get too crazy and people don't really notice. So that's really what's been happening, and of course, stability, whichever way you look at it, the more stability there is, even if we accept the central banker's definition of stability, the less volatility there is, the fewer surprises there are. Of course, it's better for entrepreneurs, for investors, to make decisions about the future. You know, if you know that inflation is going to be 2% every year for the rest of time, you can use that information to make the kind of decisions that will mitigate that. It's not ideal, of course, because you are being cheated of 2% of your gains every year. But if you know it's going to be steady 2%, you can work a way around that and come up with a way to mitigate that increase. If we have 0% inflation forever, you can do likewise. What makes things tricky is when you have deflation followed by 9% inflation followed by back to 2% inflation, because of course the numbers we talk about when we talk about inflation, particularly with the Federal Reserve, their mandate is not an absolute number. It's a yearly change in percent. And it's really important to understand the difference between those two numbers. When we talk about 2% inflation, that's absolutely fine if wages are going up at the same pace as inflation. If inflation is 2% a year, real wages are going up, you know, 1% real terms. The inflation doesn't really bite. It doesn't cause people to have to alter their standard of living, to make decisions about what they eat or how often they turn their heating on in their home. When you don't have that kind of stability, when you have inflation creeping up at 2% or more and wages falling behind, because that inflation chart of real inflation, the CPI, what the I stands for index, if that continues to just go bottom left to top right, you cross a point for every individual household on that list, on that line, that is affordable, because let's say their wages are stagnant and the CPI is going up. At some point, it's going to cross their wages, and the things they can afford are now too expensive, and they have to start changing their lifestyle. And that's when people start to sit up and take notice and start to complain about inflation. And when people complain about inflation, it's a real problem for governments, because the kind of complaining you get about inflation is, I can't afford to heat my home, I can't afford to feed my family. That gets people out in the streets, it gets governments voted out of office, and it reduces stability, and it creates volatility. So that's kind of where it feels like we are. We've been dancing around the edge of that volcano for some time now, with central banks telling the world that inflation was too low, and they were going to let it run hot, and they were going to get it up to their target, when the reality is inflation hasn't been 2% for decades now. It's way above the stated figures, and you can get away with that. You can tell people it's 2%, and they might question it, but they'll believe you, because we've become accustomed to believing governments. That trust is eroding now quickly, particularly with what's happened recently in the United States with the BLS numbers on employment and the subsequent sacking, and now the ousting potentially of one of the Fed governors. But if the government tells you inflation is 2%, it doesn't feel like it. You're not inclined in the West to believe your government's lying to you. Elsewhere in the world, not so much. They assume their government's lying to them, but that's through experience which we may end up feeling in the years to come. But at some point, when it becomes impossible to deny that 2% is not what's going on, because suddenly I can't afford my grocery shopping every week, the mood changes very, very quickly. And we've seen some of that. COVID was the trigger point for a lot of that steam being let out, and a lot of that inflation coming into everyday goods and services, that whereas before it had been confined to asset prices and equity markets, bond, rare art, wine, all these kind of asset prices. And we're at that crossroads now. We're at the point where it's impossible to make people believe that inflation is under control, and people are making decisions based on the fact, not of what the government tells them, but of what their circumstances dictate. And that means trust is being eroded. That means governments are being voted out. That means this idea of stability is gone for the foreseeable future. When we don't have political stability, we have, I guess, some kind of market stability. If you look at equity markets, which for the most part have gone up, but if you look under the surface, there's all kinds of instability brewing. We've got instability in the bond markets, wherever you look around the world. We've got instability in cryptocurrencies in places. We've got, I won't say instability, but we've got volatility in precious metals prices and commodities. So the world is quietly becoming a much more unstable place. And the ways in which that instability manifests are not just going to be confined to stock markets. In fact, stock markets are probably the last place where that will be represented. It's happening in other places that aren't places where most people are looking right now, because the average retail investor is looking at their 401k. They're looking at the headlines about the S&P and the NASDAQ, and they're not necessarily paying attention to bond markets. So this monetary system, this pure fiat system, I feel is on its last legs. And after that, I believe, no matter how temporarily, there will be a return to some kind of gold standard to stabilize this system when it finally breaks. We're not there yet, but we are moving towards it.
But as you said in that Cry Wolf speech, that governments will not go back to gold standard by choice. They will do it by necessity. And that kind of leads me to to the next point. There are a lot of talks. I think let's call them gold bugs. It's a term I really don't like, but let's call them gold bugs. They talk about Trump having decorated the white, what do you call it? Not the White Room, the Oval Room.
Oval Office.
Oval Office, yeah, with gold. His son is into, I think, some sort of gold business. Stephen Miran, which wrote some kind of paper, I think it's called the Mar-a-Lago Accord, is now probably joining the board of governors in the Fed and other changes. Could it be so that the gold bugs, they're looking for evidence that gold is re-entering the monetary arena just because they want gold to come back? Or do you think is there some kind of plan behind this? Or are they just wanting to believe something's not there?
Well, look,
Did you
gold
understand the
bugs.
question?
Yeah. I think so. I'll take a stab at the answer, and then if I answer a completely different question, you'll know I didn't, and you can ask me another question. That's fine, or ask me the same question again.
Okay.
Gold bugs are always looking for evidence that the gold is coming back into the monetary system. That's a steady state for them, and I get it. I don't think when it happens you'll need to look. I think it'll be very, very obvious. And what we've seen in the last year, I believe, is the first signs of that. We've started to see gold act independently of equity markets and bond markets, and the
Mm.
correlations that we've seen hold pretty firm. Not always, obviously, because that's impossible, but they've held fairly steady for 40, 50, 60 years. Those correlations are breaking down. The buyers of gold have been enormously steadfast, and most of them have been central banks. So there is change afoot in the gold market, which I believe to be a step on the way to reintroducing gold into the monetary system as an anchor. It won't be a choice, because the one thing that having a gold standard does, it handcuffs politicians from spending money they don't have. So it will never be a choice to implement it. When the gold standard was the norm for a couple of 100 years, the periods in time where the world was off the gold standard were temporary. So when they suspended the gold standard, it was always with the intention of going back on it again. This time has been very different. Nixon suspended temporarily convertibility of the dollar into gold in August 1971. It was never meant to be temporary. And the further we've got away from it, the bigger a stretch it now seems that we'd ever go back there again. So people are not thinking about it. They've gotten way too used to being able to spend and promise and spend and promise and spend to ever voluntarily give that up, because they've realized that's what gets them elected and keeps them in office. So gold will at some point force discipline upon central bankers and treasury officials around the world, probably after the bond market begins the job. But if you look closely, you can see signs that process is underway. It will to quote the famous Hemingway line, it will happen gradually at first, then suddenly. I think we're in the gradually phase now, and it can be so gradual that unless you're actually looking for it, you don't see it. But I think if you are a gold bug and you are looking for it, or have been looking for it, then what you're seeing now is the first concrete sign. I think you might have been hopeful in previous periods when you've seen, based on the gold price, but this is not just about the price of gold. This is about the flows of gold, the nature of the buying, the identity of the buyers. There are a lot more parts to this that make it far more likely that this is the beginning of a return to the monetary system.
But it could just as well not necessarily happen in the West, even though I think the dollar needs to regain the trust, which is kind of it has been losing for a long time. But it could
Yeah,
be.
that's going to be difficult. That's going to be difficult the way things are at the moment. I don't think there's an awful lot of trust in the dollar at all
Hmm.
at the moment. I think if there were a viable alternative to the dollar, then we would really understand how well it's trusted, and people would vote comprehensively to move away from the dollar. but there isn't a viable alternative as yet. That's part of the reason why if we see gold re-enter the system, that's why you could see some extraordinary moves to the upside in price. And again, if we go back to what we said earlier about putting gold at the center, it's not going to be a rise in the gold price. It's going to be a rapid decline in the value of the dollar as people dump it because they finally realize that there isn't an alternative to the dollar. We're not going to be presented with one. We need to get out of this while we can and before other people do. You will see a massive depreciation in that, and that will be reflected in gold. Now, people will say, yes, but the euro may go first and the yen may go first, and that's perfectly true. I've got no argument with that. But I think the idea that the euro will go first, and then 6 months later the yen will go, and then maybe a year later, the Chinese yuan will go, and then the British pound. I suspect the way that the world is currently teetering on this enormous pile of debt, these currencies could fail one after the other in very quick succession, and all of that chaos and all of that panic will go into things like gold. It won't exclusively be gold, but gold is the one proven solution to this problem, where people can look back over hundreds, thousands of years of history and see that it solves this problem. Other people will tell you Bitcoin will do the same thing. The future will illustrate that. I don't know, because I can't look backwards and say, yes, it does. So maybe Bitcoin will perform similarly. We'll find out, I suspect.
What's your view on Bitcoin, Grant?
I don't have one, to be honest, Greg. It's not something I spend any time really worrying about. I understand the reasons behind it. I understand why people value it. I understand it all. I do. And I don't wish Bitcoin any ill. I don't hope it goes to zero. I hope everyone that owns it gets wealthy. But as my friend Tony Deaton says, it's not suitable for me. So I choose not to spend my time worrying about it. Gold has provided that solution for me for 25 years. It continues to do so. And at some point, I fully expect not to want to own my gold and want to own something else instead, at which point I'll exchange the gold for whatever that other thing may be.
Yeah.
But for right now, I don't need Bitcoin. I have gold, and it does the job for me.
Yeah, I like to use the phrase or some of the concepts that I've learned from reading Nassim Nicholas Taleb. So let me just refer to the Lindy effect. So gold has stood the test of time. It's been money for 5,000 years. Bitcoin has not yet been money. So to claim it's going to be the future money, I think that's a long stretch.
Well, maybe not. We don't know. I mean, if you go back 4,995 years and tell me what would have happened if you had your gold and you said, don't worry, guys, this is the answer. It's going to be fine.
That's fair point.
People would have been skeptical then too. We just don't know. And that's why I say very deliberately for Bitcoin, it's not suitable for me. I understand the argument for it. I don't get into the weeds in it, because it's time consuming, and I've got other things I want to devote my time to, but I do understand it and I sympathize a great deal. But for me personally, I don't see the track record that I can point to that gives me as high a degree of confidence as I have in gold as to how it will perform in times of different types of financial and societal stress. That's all.
Yeah, I have another point, and that's I like the expression anti-fragile. Gold thrives under disorder, or gains. How's it put? Gains through disorder, or something like that. And that's, I mean, that's something that gold is anti-fragile, whereas other assets or other forms of money have not been. And whether Bitcoin is that's an open question.
Yeah, look, absolutely right, and it may be, but if you're speculating in Bitcoin because you think the price is going to go up, that's fine. If you are like me, your number one priority is to protect your purchasing power and maintain your savings, I'm not comfortable enough with putting those irreplaceable savings into Bitcoin. I'm just not. And so, so I won't do that. I won't take that risk with capital that I can't afford to lose. I will take the risk of owning gold with it because I can sleep at night knowing that, okay, here's how it performs to deflation, inflation, war, crisis, whatever you want. I can look at an analog in history and say, okay, I've got a pretty good sense of how this is going to perform. And it's fine to have speculative capital in something that you're not sure, but you think might perform extremely well, just not irreplaceable savings. That to me is a grave mistake to make.
Agreed. Moving a bit on, there's been a lot of speculation lately about revaluing gold, revaluing the gold, the US gold. And it's currently held by the US Treasury at $42.22.
Yep.
And the discussions, I know you know all about this, but just let me, I kind of have I'm wondering about something. They could revalue it to today's market price, but that would only make kind of a small dent in either the budget deficit or the government debt. But then there are people talking about they should revalue to $15,000. And here's my question: how is it possible to revalue something higher than the market price without tying it into the monetary system in any way? I mean, if they should do that, then gold has a new floor, and it would mean the dollar is even less trusted than today. What am I missing here?
Well, also if they do that, they obviously, the value of their gold, once it's actually at market levels, can fluctuate wildly around that. Right now, if gold goes from $3,500 to $3,000, it doesn't affect the financial situation of the United States. If they value it at market, obviously their balance sheet is subject to those fluctuations now, and that could potentially be a problem. I don't know if you can hear that. There's some kind of traffic altercation going on outside. But look, if a country decided to unilaterally value gold at $10,000 an ounce, all the gold in the world is going to flow into that country. And one would imagine, given the perilous state of other countries, there would be competition for that. So it's hard to see how other countries wouldn't follow suit. But I don't see that is what's going to happen. I don't think there's a chance in hell that the US are going to go from 42.22 to $10,000 just to take that one-off gain and square their balance sheet. I don't think they'll do that unless, well, I can't even think of the circumstance. Let's never say never. I'm sure there are a set of circumstances that might make that happen, but I can't imagine what they are. It's more likely to happen incrementally if it happens. I don't think, there's been a lot more talk about it recently. I suspect some of that were trial balloons getting floated to see what the reaction would be. I don't expect it to happen anytime soon, not without a crisis. And of course, the problem facing the US with their 8,133 tons of gold, which did for a long time make them a powerful force in the world, were we to return to a gold standard. There are all kinds of rumors about how much gold China has, all kinds. And if the rumors are to be believed, they own multiples of what the US owns now, maybe 3-4 times what the US owns in terms of tonnage, which would completely shift the power base of the financial landscape if gold were reintroduced. So there's an awful lot of variables, and I think any decision to bring gold back is such a big one, and so to do it in the absence of a crisis is unthinkable. To do it proactively, to get ahead of something, is unthinkable. I don't think anyone has the courage or even the foresight to do that. So it will be in response to some kind of strain and stress in the financial system that happens. And as we said earlier, there are plenty of places where that stress is manifesting. So it could be any one of a number of things that finally forces their hand.
Understood. I did listen to a couple of podcasts that you've done, I think the last couple of months, and you've talked about the feeling of change, and the feeling of change is different this time. This time feels different, I think you said. And you and someone else, I can't remember the name, you said we're in the 100-year pivot.
Dimitri Kofinas.
Yeah. Can you elaborate on that, please?
Yeah, I mean, it's tough to sum up 7 or 8 episodes of a podcast, and people should. They're all out in the public domain. They're not behind a paywall. If you just look for the 100-year pivot, either on my site or Dimitri's Hidden Forces, you can listen to the conversations, and they're well worth listening to. It's an interesting time, and what Dimitri and I were trying to do was just talk about this feeling of change, whether it's in the financial system, whether it's in politics, whether it's in the social contract, whether it's in attitudes to religion. There are all kinds of signposts that we are going through a period of profound change. And we're just trying to understand the nature of that change better. And the change is different for just about everyone. Everyone's feeling that change in their own different way. But there are definitely some powerful threads of change running through them. And one of them, surprisingly, is, a return to religion in the West, a re-embracing of the Christian faith, which is interesting. But it's also this, to come back to our earlier point about trusting the government. The number of people now who are willing to question the government has shot up extraordinarily. That's a big change. The vast majority of people could be relied upon to just take whatever the government said at face value and parrot it to their friends and neighbors. That's not happening anymore. Whether it's retail investors driving stock market moves, which hasn't happened before, except in very small, precise periods, normally at the beginning and end of a market in the wrong direction. So there's all kinds of changes, and we're just trying to explore the nature of that change and understand it a little better, because I'm confused by it. I feel things are different, and when you feel things are different but you can't articulate why, that's a confronting position to be in. There's a lot more comfort in understanding change, in experiencing change, if you can understand the nature of it. If you can't, it leaves you very unsettled, and I think a lot of people are feeling that at the moment. So we're just trying to ask questions and go wherever the questions take us, and try and understand it better.
I have a kind of or my perspective on that. What I feel that we live in a concrete world. Everything you can touch everything. Yet all the money we use is abstract. We use digital money. Money is no longer physical. Yet we live in a physical and concrete world. And we spend all our time in the digital and, I would say, abstract world. Do you think that's a kind of a change that has gone too far, that we've drifted too far from the physical realities? And especially, and this is something that I've given a lot of thought lately, we have a physical world, but we have abstract or digital money. Do you have any perspectives on that?
Yeah, I think it's an important point, and I think every now and again mankind needs a reminder of the tangible. And we've seen that. That's what we've been talking about. Gold is tangible money, and we've seen a re-embracing of that. And as much as people tried to tell us that the metaverse was where we were going to all be living, it didn't happen yet. I mean, maybe it does. I have my doubts. But you look at the failure of Apple's Provision, and you look at the failure of Google Glass, and you look at the failure of all these things that were supposed to be mass adoption products that would take us into the virtual world. It just hasn't happened. And I think that's the pendulum going back the other way. When when you're seeing this kind of amount of focus on the abstract, the it serves as a reminder as to how important the tangible is in our lives and in our societies. And I think this pendulum that has swung all the way over to the abstract is in the process of reversing and going back to the tangible, to the concrete, as you said. And I, for one, think it's a good thing. You know, we will learn and have embraced and invented new technologies, but they'll come back with us into a return to the tangible. And they'll be useful tools, but they won't be the world in which we live. You know, we will have abstract parts to our world. We'll have virtuality in our world, but we will re-embrace the physical world we live in, and whether that be through community or church or a repudiation of all things digital that aren't there to simply make our lives easier. You know, the digital I don't know what quite the word is. You know, the puffery, the monkey JPEGs and the abstract worlds and the, you know, Roblox universe. I get why the kids play that, but I think all that stuff is going to be shown to be what it is. You know, diversion. There's nothing real about it, and I think we've gotten away from real over these last 50 years. As the money's become less real, so has the world we live in. And ultimately, I think all of us want to know what's real. And so if the search of that takes us back in the other direction, I don't think that's a bad thing.
I agree, and you can see a lot of people, at least what I'm seeing and hearing, a lot of people wanting to buy a small farm, maybe
Yeah.
be
Yeah.
self-sustained, buying real food instead of product in the shop. They want to return. I know we're drifting away. Well, and now
Well,
I'm
but
drifting
there are
away
price
from it.
constraints around that, you know, to our
Sorry?
earlier conversation. Yes, everybody wants to buy organic, real produce, but this is where inflation becomes the problem, because you might want that, but it's expensive and a lot of people can't afford it. So, you know, the more people decide they want that, the more people realize they can't afford it. And that is going to make them angry, because they feel like they should be able to afford food, even if it's better food, even if it's healthier food. They feel they should be able to afford it, and they just haven't been trying to buy organic vegetables. But now we're returning to the real, and they feel like, you know what, I should be eating more organic vegetables. Wait, the carrots are how much? How's this happened? So yeah, whichever way you look at this, it all kind of comes back to the same places, and that's both comforting because you can kind of map the course forward, but it's troubling in the fact that it's going to be a discovery for so many people who haven't been really paying attention. They're going to discover that the world is not as they thought it was, and certainly not as they've been told it was by their government. And that's going to be a problem for a lot of people.
Hmm. Yes, great. I was wondering if you could help me out a little bit.
I can try.
Okay, so I'm recording this from Norway, and it's a small country, and I often ask people about this. We're the country of no gold. The central bank has no
You're only
gold,
one of the countries with no gold. You're not alone. You have company. Don't worry. Places
yeah,
like Canada, for example,
and New
and the
Zealand,
UK.
right? New Zealand doesn't have any
Yeah.
either. Okay, yeah. So anyway, we're one of the countries, and then we have the Norwegian oil fund. It's by far the largest investor in the world, the largest sovereign wealth fund. And I've written about this. I've made graphs about this, and I see the CEO of the oil fund saying that gold doesn't give any performance. It's what is this? We don't have a mandate for that, etc., etc. There is kind of they've gotten tall and dark. They're, in my view, they're arrogant when it comes to understanding history and monetary history and the role of gold. But, and I'd love to hear your thoughts about this. Could there be, because they have like 10% invested in US government bonds. So the by far the largest investor in the world. Could there be any geopolitical, and I don't want to get into the kind of conspiracy theory here, but that's just a thought. And I've discussed this with, among others, Alistair MacLeod. Could it be any geopolitical how do you call this, guidances, or and is there a kind of, this is a political issue? It's not an portfolio issue. Do you have any comments on that? Why
Well,
would
I think one
not?
of the clues is in what you said there, where the guy said it's not, we don't have the mandate to buy gold. Gold is something that is definitely out of the mainstream of investment. It has been for half a century. So you can pretty much guarantee that anybody who's managing money at the Norwegian Sovereign Wealth Fund wasn't around doing that when gold was part of the financial system. And so if you give people an excuse not to buy gold, they will take it
Hmm.
because it's too complicated. It's too weird. It's too out there. It's not what they've learned at business school. Um, so I think your answer is no more complicated than that, because if the head of the sovereign wealth fund is saying we don't have a mandate to buy gold, and that's the end of the conversation, there's no reason the board of trustees couldn't change that mandate. No reason at all. And one could argue it would make an awful lot of sense for them to have done that maybe 10 years ago. But again, gold isn't private equity. There are all kinds of people changing their mandates to allow them to buy private equity because they look at the returns, and they can compare those returns to equity market returns, and they can look at the dividend streams coming off certain assets and plug them into their models, and all's well. Plus, there's an awful lot of firepower behind marketing these private equity funds because of the return they make for the originators. So it's all fairly easy to understand. Actually, they're not incentivized to buy gold, and until they are incentivized either by a problem facing them that gold is a clear and obvious solution to, that they recognize, because I think they have that problem now, they just don't recognize it yet, it's not going to change. And this is why you tend to get periods where, like we've seen amongst central bankers, we've seen a rush to buy gold in the last 3 years. That rush hasn't migrated to pension funds yet, but if you look at the average pension fund's allocation to gold, it's woefully underweight as to where it should be, given the inflationary nature of the times, and where it has been when we've looked at similar periods in time. There was at one point where gold was between 3 and 5% of asset allocation back in the 70s and 80s. I think we're at 0.5% now. So it could go an awful long way. And once those mandates change, it's not an issue of price. It's okay. We need to dump X amount of US equities or treasuries or European equities and get into gold. Now, go make that happen, and the price becomes an irrelevance. So, once you reach the point in anything where the price becomes an irrelevance, that's when the fun starts. It just so happens that gold tends to get to those points when it's the only thing that's fun and everything else is in turmoil. And sadly, I feel very strongly that that's where we're headed.
Yeah, agree. Grant, I know you have a lot on your schedule. I have two more questions before we end.
Shoot.
And the first one is, when will we see a book by Grant Williams? Given your knowledge, given your experience, given your views, when will we see the first Grant Williams book?
I said I'd never say never. I'm as close to being able to say never with that question as any other question. I have no desire right now to write a book. Let's put it that way. I don't see me writing a book in the near future. It's not something that I feel compelled to do. So while I would never say never, because that would be foolish, don't hold your breath, Gregard, is what I'd say to you. Don't hold your breath.
I'll be waiting.
I'd hate to watch you turning blue.
That's a concrete form of legacy. All the podcasts and all the interviews you've done. Maybe a book is more.
Well, maybe, but yeah, it's not going to happen anytime soon. I promise you that much.
Okay. Last one. What gives you hope for the future, given all that we've discussed today and all your views about the world?
The past gives me hope for the future, as it always should, because you can look back through history, and no matter how dark the times seem at any given point in time, you will always be able to find a time in history where things were either as bad or worse, and mankind has always endured and come through those periods, um, and come out stronger. And so, we will get through this, and we will come out the other side in better shape, and with more stable finances. And it's not going to be pretty getting from here to there. And a lot of people can lose their jobs. A lot of people can lose a lot of money, and society is going to change. And perhaps that change will be violent. I don't know, but the signs are certainly there that it could be. But even on the darkest days, you look to the past, and you see how time heals, and you see how mankind adapts and adjusts and changes, and doesn't always learn. It learns in the short term. Over the long term, I think that's maybe questionable, because here we are again. But yeah, no, I think that there is always hope in the past, and hope in the past for the future. So it's not. I recognize that we're going to go through some pain, but I also recognize that there is another side to that pain. We're not going to be locked in it forever. And so, in some ways, it's almost like, look, the sooner we get this started, the sooner we can get it over with. And so everything that's been done now to hang on and perpetuate the system the way it is, and make it weaker and weaker and weaker, is only going to make the ultimate working out of this stuff worse. But that's human nature, I guess, the avoidance of pain. We'll get there, and we'll get through it, and things will be good again. I just don't know when we get there. I don't know how bad it's going to be, and I don't know how long it's going to take to get through it, but we will.
Yeah, and I guess like Murray Rothbard said in his book, "What has government done to our money?" Or a lot of people have said this, but he wrote it in that book, that the good news is that every monetary system based on inflation will end. It has to end, and that's the good news. How? We don't know, I guess.
Yeah, we don't know how, we don't know when, and they're the two things that everybody wants to know. Everybody says when. Everybody asks that question, when. And if you think about it, if you think about asking that question, if you think for more than 2 seconds about the nature of that question, you know that whoever answers it is giving you a completely made up guess, because no one knows the future. So every time you find yourself asking that question, when, just take a moment and realize that there is no answer to that question. It's completely unanswerable. Well, you can guess, and that's fine. Some people have a better guess than others, but it's still a guess. So try to focus on the things that you do understand in the here and now. Prepare yourself for the eventuality, but don't assume. I as a kid, used to watch Bugs Bunny cartoons, and you'd always see him in a falling elevator, and right before it hit the ground, he would just step out of it, and be fine. And I think people have that mentality that, well, yeah, things are going to get bad, but look at all the money I can make in the meantime, and I can step off this elevator right before it hits the ground. It doesn't work that way. So, yeah, I think recognizing that is perhaps the first step.
Yeah, I agree. Okay, Grant, thanks for the chat. Thanks for all your
You're very welcome.
perspectives, and I wish you all the best.
Thank you, my friend. Good to see you.